All right, let's talk about one of the most powerful and honestly most misunderstood forces in the universe, compounding. And to kick things off, we're going to start with a fact that just seems, well, completely confounding.
Yeah, you heard that right. $81.5 billion. That's how much of Warren Buffett's fortune was earned after he qualified for Social Security. That's over 96% of his entire net worth. So how on earth is that possible? The answer lies in a principle that starts incredibly small, but given enough time, leads to world-changing results.
And to really get our heads around this, we're not going to start with spreadsheets or stock charts. Nope. We're going way back to the last ice age. I know, it sounds like a weird place to start, but trust me, it holds the secret to everything.
You know, for the longest time, scientists were totally stumped about what caused ice ages. Then, a Serbian scientist, Milutin Milankovic, found a huge clue. He figured out that these tiny, predictable wobbles in Earth's orbit actually change how much sun we get. But here's the thing, that little wobble, on its own, it wasn't nearly enough to plunge the entire planet into ice. Something else was going on.
The real lightbulb moment came when a meteorologist named Władimir Kopin realized everyone was looking at the wrong season. It wasn't about brutally cold winters piling on more snow. The real culprit was summers that were just cool enough that they didn't melt all the snow from the winter before.
And right there, that's it. That's the compounding feedback loop in nature. You start with a little leftover patch of snow. That white snow reflects more sunlight, which makes the area around it just a little bit cooler. That coolness allows more snow to stick around the next year, which reflects even more sunlight, which makes it even cooler. You see how this works? A tiny, insignificant start, given enough time, builds on itself again and again until it becomes this unstoppable force, a massive ice sheet covering a continent.
So what in the world does an ice age have to do with Warren Buffett's billions? Well, it's the exact same logic. You know, thousands of books have been written about his genius, his value investing strategies, but they almost always miss the single most important variable.
See, Buffett's real secret weapon wasn't just his incredible skill, it's that he has been a great investor since he was literally a kid. He started with a small base, just like that first patch of snow, and then he gave it an unprecedented amount of time to grow. The real magic, the overwhelming majority of his wealth, didn't come from any single brilliant move. It came from a pretty good advantage compounding relentlessly for decade after decade.
But let's really drive this home. Let's do a little thought experiment. What if Buffett had lived a more, normal life? What if he started getting serious about investing at age 30 and then he retired at 60? We'll even let him keep his mind-blowing 22% annual returns. What do you think his net worth would be?
The answer? It wouldn't be anywhere near $84.5 billion. It would be about $11.9 million. That means that 99.9% of his current wealth is directly tied not just to being a great investor, but to the sheer, uninterrupted length of time he let that skill work. His success isn't just an investing story, it's a story about the power of longevity.
And if you're still not convinced that time is the most dominant factor, let's look at a case that is just, well, it's completely counterintuitive. A story about how earning 66% a year can leave you with way less money than earning 22%.
Look at this. Jim Simons. The guy is an absolute legend, a mathematical genius. His fund has compounded money at a staggering 66% per year. That's 3 times better than Buffett. But look at his net worth, 75% less than Buffett's. And the reason is so simple. Simons didn't really hit his investing stride until he was 50 years old. He had less than half the time for his genius to compound.
I mean, the numbers here just get insane. If Jim Simons had started when Buffett did and maintained that 66% return, his net worth would be $63 quintillion. That's a number our brains can't even process. That is the raw, almost violent power of compounding when you give it enough runway. So, okay, if this is so unbelievably powerful, why do we all miss it? Why are we so obsessed with short-term gains, with what's happening today, instead of playing the long game? Well, the answer is basically hardwired into how we think.
Our brains are built for a linear world. We totally get this. If you ask us to add 8 to itself 5 times, we can picture it. It's steady, it's predictable, we can do it in our heads. It feels natural, easy peasy.
But then you try this, multiplying 8 by itself 5 times, and your brain just short circuits. The result is so much bigger, so much faster than we expect, that it almost feels wrong. It's not intuitive at all. And that is the feeling of exponential growth. That's compounding. Our brains just aren't wired for it. And you see this intuition gap pop up everywhere. Just think about computer storage.
For the first 40 years of its development, from 1950 to 1990, the entire industry produced about 300 megabytes of storage. But the next 30 years, 100 million megabytes. It's an exponential curve that catches even the smartest people off guard. Heck, even Bill Gates famously wondered why anyone would ever need more than a gigabyte.
So what's the big takeaway here? After all this, after ice ages and billionaires and mind-bending math, what's the actual strategy that harnesses this incredible power? Well, it turns out to be deceptively simple, if not a little provocative.
You know, maybe the best investing book ever written should just have a really simple title, Shut Up and Wait. Because it's not about finding the perfect stock at the perfect time. It's about giving your money the one ingredient that matters more than anything else, a long, uninterrupted runway of time. Because at the end of the day, that's what this is all about. Good investing isn't about hitting home runs and getting the absolute highest returns. It's about getting pretty good returns, solid, respectable returns that you can actually stick with through thick and thin for the longest possible time. That's how you build the snowball. That is the real secret of compounding.